steps for dealing with the bank. So perhaps you're renting in a property where it is run by a body corporate.
Understanding the basic calculation, income minus expenses, and you want to be left with a positive income.
It is a very tough game. It's not easy at all.
To stay ahead of knowing exactly what your clients need, what their teething issues are.
Have a joint move-in inspection.
That a lot of people that are coming into sectional title homeowners associations are just like you described, not only first-time homeowners, but first-time owners and residents in community schemes.
They get to see the perspective from the other side of the aisle. And I think that's a really important thing to do.
It's a market that's estimated to be transacting at least 9 billion rand per year. So it's a huge market.
In order to get there, you need to be able to build up a track record.
Your cash flow model needs to be sharp.
A quote comes to mind. The best time to buy a property was about 10 years ago. The next best time is now.
Good evening and welcome to episode 81 of the Private Property Podcast. I'm your host, Zama Kumalo. It's the Wednesday edition of the show, which means that we'll be speaking to somebody from Absa Home Loans this evening. And of course, we're going to be looking at understanding your property valuations. Now, this is one of those topics that gets me very excited. I mean, talking property in general gets me excited, but valuations in particular is one of those things that I think we don't talk enough about, but it affects us in so many different ways. Whether you're a homeowner who only bought your primary residence, for example, or certainly a seasoned property investor who has a string of various properties, understanding your valuations becomes such a crucial thing, essentially, that you need to do on your property journey. But before we get started with this evening's competition, remember, we are running that competition for Women's Month this month right here on the Private Property Podcast, where, of course, we are celebrating women. We want you to nominate and name any woman in your life that you know and award them the Private Property Courageous Woman Award, and share with your nominee, share as you nominate your woman a short message why they represent love, power, and strength. You and the woman that you're celebrating stand a chance of walking away with 1,000 Rand cash prize, and we will be announcing those winners on Friday, the 14th of August, right here on the Private Property Podcast. All the best to everybody who will be nominating their courageous women. We certainly cannot wait to read about the phenomenal women in your life. Now, to get us started with this evening's conversation, I am joined by Estie, who is the manager of valuation strategy at Absa Home Loans at Absa. Estie, thank you so much for joining us this evening.
Thank you very much, Zama. It's a pleasure, and good evening to all the listeners.
You know, Estie, as I was saying in the beginning, that property valuations is certainly one of those things that gets me quite excited. And I was even sharing with you off air that this semester, I just started doing property valuations as one of the courses that I'm doing. And it's very exciting, but it also is one of those things I find we don't talk a lot about, certainly, in the property space, or even as we are navigating, growing our property portfolio. Perhaps before we even get to the nitty-gritties of how it affects us, perhaps take us through first what the property valuation, what it actually is, and, how, for example, the municipality uses this, and how banks in particular also use this.
Zama, property valuations is where a valuer does market research or conducts market research to estimate a property value. There's various methods that he can use. He can use the direct comparable method that we use mainly for residential properties. He can use the discounted cash flow or the cap rate method of valuations. That's mostly for commercial properties. I think most importantly, the function of a valuer is not to establish a market. We are there to analyze a market and to look at the behavior of buyers and sellers in the market. We do a lot of research, and we use that research then to estimate a market value. Municipalities, because of the huge amount of properties they need to value, they make use of computer-assisted mass appraisals These market values that they determine is then used, it forms part of the calculation for your monthly rates, your property rates that owners of properties pay. From a bank perspective, we use the valuations, the market values, to ensure that we've got sufficient security in place for the bonds that we provide to our customers. I think also very importantly, a valuer must be registered with the South African Council of Valuers. They must have the necessary qualifications. You can register as a candidate, associate professional or professional, and you can study while you are registered and working, I think, which is awesome for students who can earn an income while they're working as a valuer.
You know, Estie, one of the things that we tend to find, you know, when we're in the property space is that you'll find that a property, let's say a 2-bed apartment that is 60 square meters, will be valued differently, for example, when it is in Midrand versus when it is in North Riding or versus when it is in Bruma, for example. And it's one of those things that, you know, certainly newcomers into the property space sometimes think, but okay, why is that the case? Because at the end of the day, this is a 2-bedroom apartment or a 3-bedroom house, and the size is the same, and yet the valuation you'll find, and even certainly from the municipality or when the bank, you know, sort of comes and values it, will be significantly different. Perhaps take us through, you know, what are some of the factors that influence the valuation? So what are some of the things that as valuers you effectively look at as you value particular properties?
Zama, I think that's also a great question. I think definitely, as I stated earlier, demand is important. It's important to understand the demand, and that will affect the value of a property. But things we look at is the layout of the improvements. Does it make sense? For example, if you have to walk through your main bedroom to get to your swimming pool or entertainment area, I don't think that would appeal to a lot of buyers. Secondly, access and egress. How easy is it to get to and from your property? Your property, is it situated next to a very busy road? You take half an hour to get out of your own front gate. I think the size of the property differentiates it from other properties, room count, bedrooms, your finishes. Is it, do you have a modern property? Is the finishes in the property 100 years old? I think styles, I think I've covered most of it. Safety, security, that's also important. Is the property maintained? Is there any structural issues? So there's quite a variety of things we look at. I think location, 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 to your point earlier, also very important.
You know, Estie, one of the things that you certainly find when you look at valuations, and I'm sure a lot of property owners would have seen, I think it was nearly a year and a half, maybe 2 years ago, there was the municipal rates sort of being reviewed, and they kind of went all over, I'll say all over town, essentially, you know, inspecting different properties and trying to get whether they're still the same value. And some of us got our rates essentially changing, and particularly the value of our properties. I mean, there were quite a number of mistakes. So my properties are in the COJ area, so all of that admin was under COJ. And I remember one of the issues that happened with one of my properties was it's in a residential building, so it's not mixed use. There are no commercial, for example, companies underneath. And yet, for some reason, almost 90% of the properties in the building suddenly got rezoned to commercial instead of residential. But one of the big things that, you know, we certainly saw in that process was that a lot of properties change, their value essentially changed. So if, for example, your value was, let's say the municipal value that is was 200,000, now it may have perhaps gone up to 500,000. A lot of owners were quite unhappy with this, as we were saying earlier, that, you know, oftentimes this figure is of course used by the municipality, even in terms of how much they're going to be charging us for rates, which I think, you know, raises then the question, certainly for a lot of people, when they look at what the market value versus the market price, because when you do look at that sort of the market value or the valuation, the municipal valuation, more often than not, it does significantly differ from the selling price. So the municipality might have valued your property, for example, for 300,000 rands, and yet the general, I'll say, market price of that property might be around 500 or above. Perhaps, take us through how that essentially happens, and what are some of the thinking really when we look at the difference between the valuation amount, so particularly the municipal valuation amount versus the market amount, so whatever it is that the property essentially ends up selling for.
So I think there's two parts to that question. The first around municipal valuations. I think we must remember that municipal valuations, or the municipal roll, to my understanding, is conducted every 4 years. So you will see movement in that. And as I stated earlier, because of the bulk of valuations they use computer-assisted methods that might cause a slight increase or decrease that's not aligned with market, but they offer you the opportunity to object to the values, and then they take it under revision and adjust the values accordingly. What is the difference between market value and a selling price? I think it's important to firstly understand the definition of market value. So market value is the estimated value for which a property will sell on the date of valuation between a willing buyer and a willing seller in an arm's length transaction after proper marketing, where both acted prudently, knowledgeably, and without compulsion. So just to give you a few examples, because that's quite a mouthful. If, for example, I buy a property, or my dad sells me his property, he's not going to sell it necessarily to me at market value. He's going to give me he loves me very much, and he's going to give me a discount on that property. The selling price of that property might be 800,000, but the market value will be 1.2 million. The selling price is lower than the market because of the agreement between me and my father. And if you look at the definition of what valuation or what market value that I just gave you, this was definitely not an arm's length transaction, because these two people are related. So that will be considered purchase price. And then whatever the valuer determines, he will look at that definition and make sure that the transactions he uses conforms to that definition. There's another example. In exceptional cases, you might want a specific property. So I might own, let's say, a school, and I want to expand that school, and the stand next to the school becomes available. I want that stand. I don't want to stand a block down. Because of the fact that I want this stand, I would be willing maybe to pay more than market for it to make sure that I obtain and that I am a winner if there is discussions or other buyers that's interested in this piece of property, to make sure that I am the winner or that I give the winning bid. In that case, your market value will be lower or might be lower than the selling price. So it's important just always to look at what is the definition of market value, and make sure that when you determine market value, that the transactions you use conforms to that definition.
And Estie, then it essentially also brings me to our next question, because when we think about that, we also think about how, and we've touched on it earlier, that different prices or different costs are essentially determined by the valuation of your particular property, whether it is what you're going to be paying, COJ, or whichever city that you particularly live in. Perhaps take us through, when we look at particularly insurance premiums, are those typically based on the municipal rates, or are they based perhaps on the, the selling price, as we've, spoken about?
So replacement cost is calculated by looking at, so replacement cost is not a selling price, and it's not a market value either. Replacement cost does not consider the cost of your land. It only considers the improvements. So to explain it in layman's terms, what will it cost me to rebuild all the improvements on my stand at this point in time? And that's a replacement cost. So if my property burnt to the ground today, what will it cost me to rebuild my property with similar finishes, similar design, etc.? And that is the replacement cost. And we use rates, for example, from standard, from industry sources such as ICOM. They provide us with an indication of what items will cost. For example, what is the building rate per square meter, etc. So that is replacement cost, and that is used as part of the calculation of your insurance premium, your monthly premium. Market value, as I already covered market value a bit earlier.
I'm this evening in conversation with Estie Roux, who is the Managing Valuation Strategy at ABSA Home Loans at ABSA. And we're looking at understanding your property valuations. It's certainly one of those very important things that as a property investor or homeowner in general, you have to have a very intimate understanding of, and I think more so for the investors, because there's so many conversations that we typically have when we're doing work and trying to find the right deal for our properties, that understanding valuations, but also understanding how the bank views valuations becomes such an important part of certainly your property journey. And one of the things that I want us to talk about after this break with Estie is actually around the part where we certainly find that during your home ownership or home buying journey, that the bank's valuers, of course, do come to the property to value the property, and there might be sometimes instances that they flag as a reason why they might not extend, for example, a bond facility to you. We want to better understand what are some of those snags that valuers would typically pick up that would make a bank perhaps slightly wary to extend, credit facilities. We've certainly covered different reasons why banks might not want to, extend, certainly a bond to various customers. But this is one of those that does come up, and when you don't know about it, you sometimes don't know how to go about to remedy it. If you've ever had an encounter with a valuer and perhaps you always wanted to ask them a particular question, especially as either an aspiring homeowner or certainly as a property investor, do send them through and we'll be covering them just after this break. Good evening and welcome back to episode 81 of the Private Property Podcast. I'm your host, Zama. This evening we're looking at understanding your property valuations, and I'm speaking to Estie Roux, who's a manager of valuation strategy at ABSA Home Loans at ABSA. And before the break, I said one of the things, Estie, that I want us to talk about is I've certainly even had this encounter, and I've heard stories from various property investors where they identify a particular property and they have a very keen interest, they view it, they're happy, they sign their OTP, and then they obviously send it to the bank, and the bank sort of starts the process rolling. Your credit score is fantastic, everything is great, they've got the paperwork, but then they send their valuer. The bank's valuer goes, they see the property, and then they come back and the word back is no, the bank is not happy with extending that home loan facility. And the issue is not your credit score. Credit doesn't have an issue with it. It's the valuers that have snagged issues with with the property. Perhaps take us through what are some of the things that would get snagged, because I think some people probably don't understand what some of those things are. I think it would certainly save us quite a lot of time when we also just are aware of them in our property journey, especially as investors.
So Zama, I think luckily that happens on an exceptional basis. But as I stated earlier, it's very important for the bank that whatever property is offered as security is sufficient security. for the bond that we're extending. So we must make sure that we are able or will be in a position in future to sell that property and that there is a demand for the property. I think things that we look at that makes us decide maybe that it's not sufficient security. Firstly is poor construction. If the property does not comply with the national building regulations, if the property is dilapidated and require quite substantial repairs, if there's structural issues with the property, say for example, you've built your property on clay soil not with the right foundation, you might have cracks that you could put your arm through. We might not see that as sufficient security. Then properties that's constructed with asbestos, as you now know, according to the Health and Safety Act. We also do not bond properties constructed of asbestos. And I think properties that's zoned residential but is no longer used for residential purposes. So an example of that might be a hair salon. The property was gutted, it's one large room and used as a hair salon and a beauty salon. It's still zoned residential and it's in a residential neighborhood. Those type of properties we will not bond because you might be selling yours because there's no demand for hair salons in that neighborhood, and it's an illegal use and it no longer conforms to a residential property. And that is what the bond is for. Then also where there's not municipal services, so there must be a connection to bulk municipal services, water and electricity. I think those are the things that we look at. If you've built your house cash and now you want to bond the house, you might not have enrolled your property with the NHBRC. You might not have registered a builder or registered yourself as an owner builder. We would require you to do that before we bond that type of property. And I think in these cases, it's quite extreme cases. And to remedy these will be quite costly and take time, if possible.
Yeah, and as you're going through the list of the different things that would potentially get snagged, part of me was thinking, okay, actually, I have a sense of what happened with that particular property. Luckily, I was able to, probe and ask, certainly from the bank's perspective, why it is that they didn't want to extend the facility and essentially almost wanted insight. And I'm very glad that they were quite helpful in saying, look, these are the concerns that we have about the property. And in as much, certainly as an investor, and I'm sure a lot of investors get excited, you see a deal and you might be familiar with the area, you've certainly run your numbers, and hopefully you've run them as prudently as possible. And you're thinking this is going to be a fantastic buy now to essentially raise the financing. We certainly sometimes don't think of some of those things that a bank, as you've pointed out, Estie, would of course want to always make sure are in place. And I think it certainly is one of those things as property investors that we always need to be mindful of when we are looking for the different deals, that sometimes you almost think if a bank wouldn't want to buy this particular property, or for example, even extend a loan facility for a particular property, you almost need to wonder, why is that the case? Especially when you as the applicant, your finances are perfect, but they have an issue with the actual property itself. I think it certainly does have you asking questions, because you want the surety that financial institutions are going to obviously extend that bond facility and they're happy with that particular property. Now, Estie, I wanted to talk about, some of the trends that we're certainly seeing in the property space right now. I think, we were saying earlier that I think a lot of people are eagerly watching the property market. We've certainly seen, the devastating effects that the COVID-19 crisis has had on different sectors, and property, of course, also being one of the sectors that have been affected slightly differently, though. Some people are waiting for a housing crash of sorts so that they can buy property at like dirt cheap prices, whereas a lot of people have said that actually isn't going to happen, certainly not in the South African context. Perhaps, shed some light certainly for us what the state of the I say the values of the homes, particularly residential property, what you've seen particularly during these tough economic times, because there are people who are looking at, buying, whether it's their first primary residence or perhaps adding more properties into their investment portfolio. And some are thinking, okay, we're seeing historically low interest rates, but maybe I should wait a bit longer so that the property prices go down. Perhaps shed light about, the stage of where the property market is, particularly when it comes to valuations, given the effects of the COVID-19 crisis on the economy.
So the feedback that I get from the valuers, we're quite pleasantly surprised at what we're seeing at this point in time. The market is very active, 1.4 properties from 1.8 million and downwards. Definitely seeing a lot of activity. With regards to property values, properties are very resilient in our country, and I think there's a huge demand for affordable property in our country. And with the fact, as you stated, historically low interest rates, I think people are making use of the opportunity to get into the property market if they were in the past unable to afford to buy a property because of the low interest rates. People might be scaling up because now they can afford that house on the hill, and other people might be scaling down because of job losses. We certainly are not seeing property price drops or value drops at this point in time for property worth 1.8 and below. In some cases, I've had feedback where we're seeing slight increases in property prices. I know one of the valuers mentioned Nelspruit as an area where developers are quite busy with, or there's quite a huge demand for their properties, and they're selling it at quite at a good rate at this point in time. And also in Nelspruit is one of the areas where people have said that the property prices have actually slightly increased. So I think while the interest rates remain low, and in that specific property sector, 1.8 and below, we won't see a crash of property prices. And maybe the people must, if they want to enter the property market, do it now while the interest rates are so low.
We've got a question here from Mata Shingane, who asks, so do banks consider the market valuations when approving a home loan?
Yes, definitely. Yes, we use the direct comparable method of valuation. That means we look for transactions in your specific area. We use those transactions. Let me just mention, it's similar properties than the subject property. We use those transactions to estimate a market value for your property. So it's definitely a market-related value.
And another question here, we've got Estie, this one coming in from our YouTube viewer, Sebastian Moafrika, who asks, how do banks view city center flats? Are they considered as good collateral?
That's a difficult question. Again, it depends on where in the city center. Is there, as I stated earlier, what's important for us is demand. What is the demand? Is the property well maintained? What does the municipal services in the area look like? If you're looking at buying flats, please remember to ensure that there's a functioning body corporate in place. Look at the finances of that sectional title complex to make sure that it's healthy, that they've got cash flow, and then they will be able to maintain the property. Those properties is good investments, good investment properties, but you must be very selective when you look at those type of properties.
And, Estie, on the issue of maintenance, perhaps share with us what some of the best practices are to, maintain or certainly improve the value of our properties.
I think the first thing that I must say for improving properties is you must understand the suburb that you live in. You must understand what is the demand for properties in those suburbs. For example, if you live in a suburb where the demand is for 3-bedroom, 2-bathroom properties, and you add a 4th bedroom, you might not see the increase in value that you would expect to see looking at the costs that you invested to add that 4th bedroom. Similarly, if the style at the moment is a white kitchen, for example, and you go for a shocking pink kitchen, and you've built that, spent a lot of money on this brand new kitchen, and you're selling this property and you think you're going to make a killing, the person would walk in probably and think, I have to replace this kitchen. It will cost me 200,000 Rand. So I'm going to deduct that from the selling price. So I think importantly, understand your suburb, understand the demand, speak to your local estate agent, and understand what people are looking for, and use those things to guide you when improving your property, to improve the value of your property.
Estie, before I let you go this evening, do you have any, almost last final tips for viewers at home that we almost always need to be mindful of? So it's almost like what would every property valuer want us to know when it comes to buying and selling property?
I think it's very important that we understand municipal bylaws, that we have plans in place for our properties. So many people buy properties without asking for plans. Make sure that you have the plans for your property. Make sure that you're aware of NHBLC requirements when you're planning to build a new property or add on to a property. Make sure that when you buy in a sectional title complex, as I said before, that there's a functioning body corporate, and make sure that if you look at the sectional title plan, that all the improvements of your unit is on that plan. I think people forget about the legalities of buying a property. And I think lastly, if you buy a property, consider the maintenance costs or the upkeep costs for that property as part of your budgeting process. A 2,000 square meter stand will require a lot of maintenance. A swimming pool, how does that impact costs with regards to water, etc.? And the maintenance of a 550 square home. So I think those are important things for us or for the listeners to keep in mind when buying properties.
Estie, we're going to leave it there this evening. Thank you so much for joining us.
Thank you very much, and thank you to the listeners for their time.
And that was Estie Roux, who's the Manager of Valuation Strategy at ABSA Home Loans at ABSA. Certainly has been an insightful conversation when it comes to understanding your valuations. I think it is one of those things that, especially as property investors, we could easily forget about. But as Estie has pointed out, there's so many things to think about when you're buying property, and understanding the valuation process has to be one of those things that are also top of list. Well, folks, that is it for us, or certainly from us this evening right here on the Private Property Podcast. It has been a pleasure to be with you. We're back again tomorrow evening right here at 7 p.m. And as usual, hoping you're staying home and staying safe.
Hi, I'm Clifton Smithers. I live in Ballito, where my partners and I run a business called Union 3. As a family, we chose to move here about 6 years ago. What attracted us to the area was the safe and relaxed lifestyle of the North Coast. We're surrounded by so much natural beauty, and we love that it's so casual. It's just not as intense as a busy city. In fact, that's one of the main reasons there's so many people moving into the area. There's some amazing lifestyle estates out here. We've got St. Barley, Brettonwood Estate, and Zimbiti, to name a few. The Ballito Lifestyle Centre caters to everyone's needs. There's also some smaller commercial centres like Tiffany's and Salt Rock. There's some excellent restaurants to choose from, and there's a really wide variety of activities on offer. From mountain biking out on the trails to surfing at any one of the beaches, there really is something for everyone. This quiet little town really comes alive over the weekend. The live concerts and the farmers market at the Lychee Orchard is very popular. With the new international airport just 15 minutes down the road and the unmatched lifestyle that this place offers, it's no wonder that the North Coast is the fastest growing town in South Africa. My family and I absolutely love it here, and this is our neighborhood.
tips for dealing with the bank. So perhaps you're renting in a property where it is run by a body corporate.
Understanding the basic calculation, income minus expenses, and you want to be left with a positive income.
It is a very tough game. It's not easy at all.
To stay ahead of knowing exactly what your clients need, what their teething issues are.
Have a joint move-in inspection.
That a lot of people that are coming into sectional title homeowners associations are, just like you described, not only first-time homeowners, but first-time owners and residents in community schemes.
They get to see the perspective from the other side of the aisle. And I think that's a really important thing to do.
It's a market that's estimated to be transacting at least 9 billion rand per year. So it's a huge market.
In order to get there, you need to be able to build up a track record.
Your cash flow model needs to be sharp.
A quote comes to mind. The best time to buy a property was about 10 years ago. The next best time is now.